So you're thinking about moving to Raleigh, North Carolina and using your VA loan. And I bet you're wondering about some of the myths and misunderstandings that you've heard about. My name is Pete, and I'm a local realtor as well as Army veteran. And whether you're moving in 9 days or in 9 months, you should take my contact information out of the description below. You can call, text, email, or even set up a Zoom. I am joined by Steve Doherty, my lending partner from Advantage Lending, and we're going to dive into those myths and misunderstandings to help clear them up for you. One of the main things that I hear about all the time, a lot of people ask me, especially people that are going to PCS, move from Fort Campbell to Fort Bragg, or they're retiring out of the military and they own a house at Fort Bragg and they're in Pinehurst or Southern Pines and they own a house, they want to move, but you have family and kids and dogs and there's lots of moving pieces. So the question that pops up all the time is, can I hold two VA loans at the same time?
The answer is yes. Number one, you can use your VA loan in succession indefinitely, right? When you have one VA loan, there will be a max as to how much you can borrow on home number two, right? So it depends on whatever your charged entitlement is. It's not necessarily tied to the current balance on your loan. But let's say you bought a home for $200,000 10 years ago, and you're looking to buy a $350,000 home now. You almost certainly will be able to go 100% financing on home number two, right? If you bought a home 2 years ago for $480,000 and now you want to buy a home for $850,000, you will almost certainly be making a down payment if you go VA. There will be a max loan amount as to how much you can borrow, and that will determine what the loan amount can be on home number two. Doesn't mean you can't get another VA loan. Just means there will be a maximum loan amount, and you'll have to make a down payment to cover that gap between the purchase price and
how's that calculated? How does somebody just kind of have an idea, or how is that figured out?
So the calculation is kind of convoluted, right?
I won't make you do the math.
Thank God I'm a Marine. Marines don't do math, right? But it depends on your charged entitlement. How to know what your charged entitlement, and charged entitlement is sort of loosely tied to whatever your starting balance was on that existing VA mortgage. You can get that from your certificate of eligibility. Now, you as a veteran, you have the ability to pull that yourself. A good mortgage lender who does a lot of VA lending, like me, I can pull that for my borrowers. I do that all the time.
Right.
That will tell me what their charged entitlement is. So that's step number one. Is there
a different process for somebody who's currently on active duty than somebody who is a veteran to get their charged entitlement?
Exact same process. Now, especially if you already own a VA, if you already have an outstanding VA mortgage.
Right.
So step one, check the charged entitlement. Step two, you take the county loan maximum on a conventional mortgage, right? In our area, that's about $806,500. Okay. It's different in other high cost areas, but pretty much North Carolina, $806,500. Then you take the purchase price on home number two. So if you forget what the loan maximum is, because it's not the VA loan maximum, it's the conventional loan maximum. If you don't find your charged entitlement and you're not quite sure yet what the purchase price will be on home number two, you can just rely on a mortgage professional to calculate that on your behalf. I have talked to some I've heard from borrowers who's the bank they were previously dealing with said, no, you can't have more than one VA loan at a time. Or they won't check at all and they'll say, yep, you're good to go on home number two. Have fun. Here's a pre-approval letter without factoring in the fact that they have a current VA loan that they have to do something with. Yeah. And it comes from banks that are so-called
Have you
VA
picked
experts.
up people that have kind of gone through that process with another bank or another lender or another realtor and said, hey, they told me this and now they're telling me why, and I was about to put in an offer, or I put in an offer and now I'm kind of out? I'm SOL.
I have.
That's terrible.
I've had one where someone was, after they got under contract, I was actually able to salvage it. Another one where there was absolutely no way to salvage it. And there's been some other ones where they're about to go over the cliff, right? They check in and we can sort of steer them towards shore before they pull the trigger.
Wow, that's crazy. Well, goes to show, got to have somebody who knows what they're doing.
Yes, very much so.
So let's back up for a second. Back to the basics of a VA loan. Biggest benefits of a VA loan that you see as a lender.
So, I mean, I'm a little biased as a veteran, and I do a lot of VA lending, but the VA loan is the best mortgage that you can get, period. Nothing comes close to it, right? And from my perspective, there are three big benefits. Number one is 100% financing,
Right.
meaning no down payment.
Right.
So the only thing you need to pay for at the closing table are closing costs, prepaids, escrows.
Right.
So that could be as little as, depending on the purchase price of the home, could be as little as 4, probably wouldn't be any more than 13. So if you got 15 grand in the bank, you can get a VA loan, regardless of what the purchase price is, right?
Yeah, that's a good point. I like to tell people, hey, this is the amount of money that you should plan to have in order to buy a house. And when I say that number, I'm like, oh my God, you only need 10 grand to go buy a $600,000 house.
Yeah, it's pretty remarkable. So I think that's the biggest benefit of a VA loan, because it gets people into houses faster because you don't need to save for a down payment.
Right.
You can cover closing costs. You can buy a home with a VA loan. So that's definitely the big one. Now, there are other 100% financing options. There's USDA. There are other low down payment options, right? FHA, Home Possible, Home Ready. But those programs come with monthly mortgage insurance. And that monthly mortgage insurance can be significant.
Right.
On a VA loan, there is no monthly mortgage insurance.
Right.
There is potentially a funding fee if you're a veteran and you do not have a disability rating from the VA.
Right.
Now, to be honest, I would say 80% of veterans of kind of our vintage, the sort of GWAT era, most of us have some kind of rating, at least 10% or higher.
Right.
So most veterans do not pay the funding fee. If you do, you pay a small funding fee, but it's rolled into the loan amount.
What if you're active duty and you don't have a VA rating?
Active duty service members will always pay a funding fee.
Yeah. Right.
Now it's debatable if you, and I've had this happen before, active duty Coast Guard, discharged, disability rating, then turns into an active duty soldier. You're gonna have to tune into another video to earn the answer to that question.
Gotcha.
But I would say the third big benefit to a VA loan is really, really good interest rates. The interest rates on VA loans on average are just lower. Like in my experience, I would say 0.5% lower than on a conventional loan, which is even more remarkable considering you're not making a down payment and you don't have any monthly mortgage insurance.
Right.
So from that perspective, it is a really, really good deal. Those are the three big ones. I would say two other things to keep in mind about VA loans is they're kind of forgiving and permissive with, I would say, like imperfect or even poor credit.
Right.
And they're very permissive with regard to a debt to income ratio.
Right.
So how much of a mortgage payment are you allowed to have relative to your other debt obligations? The VA is going to let you do way more, especially if you have good credit, like way more. Right. And they'll go lower on credit too, right? Like you can go down as low as 600, even 580 if you have certain other factors about you that kind of, offset the low credit score itself.
All right, I'm sold. So what other things are benefits of a VA loan, in terms of, builder credits, things like that. A lot of times I'm helping somebody buy a new construction house, things that they, builders, especially in the market in the, we're end of summer 2025, they're trying to offload some houses, right? So they're giving some deals and saying, hey, I'll give you this amount of money towards closing. It's $15,000 or $25,000 towards closing. Well, closing isn't going to cost $25,000.
Right.
So what are we going to do with that?
That's a really good point. And this is very unique to the VA, right? So, and you know better than I do, but those sellers generally aren't going to give you a price cut. They're not going to touch the price.
It's not going to go towards the price of the house.
But they'll give you this cash that you can utilize to offset closing costs, prepaids, escrows, right? Prepaids and escrows are taxes, insurance, prepaid interest that we collect at the closing table. First, let's talk about what would happen on a conventional loan. Let's say you get a $15,000 builder credit, right? A seller credit.
Right.
Okay. And let's say your total closing costs are $10,000.
Right.
Well, now you have $5,000 left over. You have to use it. It's use it or lose it. You can't get a check at the closing table for $5,000.
Right.
So what will they do? You'll have to use it. Now you could use that money as points. You could buy the interest rate down. That's probably what you will have to do. You could prepay some HOA dues, but that becomes kind of ticky-tack.
Right.
You're probably gonna have to just buy the interest rate down. That may not be a great deal.
Right. I mean, what if interest rates drop in 6 months?
Yeah,
You bought it down a
$5,000.
quarter. Bought it down a quarter point,
Right.
and now you're like, great. I just spent $5,000 on that.
You wasted money. The other thing is, on those same scenarios, is the builders and their lenders will pressure you into just using the whole thing to buy the interest rate down. Right. And the rate will be pretty low. Congratulations, you just wasted $15,000. On a VA loan, you can take the excess credit and use it to buy down or pay down your debt. So if you have an Amex with $18,000 on it, you can pay it down by $5,000 at the closing.
Or a
table.
Camaro with a 27% interest rate on
Yes.
it.
Yes.
You can pay it down.
I think that's the Jacksonville special, they call it, right? Yeah. So you can take and you can apply it towards any kind of debt. Now, some lenders want to see something on the contract eventually showing, hey, it's getting split between paying for costs and buyer's debt. But either way, the VA lets you do that, and the VA is the only game in town where you can do that.
All right, so I'm sold on VA loans. But what I really want to know is, when do you think, from your perspective, should a borrower choose another option for their lending? Riff on that.
Is that kind of like admitting that your son isn't the best on his sports team? It's kind of hard to do, but sometimes you have to face the music.
Yeah, exactly.
So there is one circumstance where it could make more sense to get a conventional mortgage than a VA loan. Number one, if you're making a large down payment of at least 20%, right? And it's probably an and you do not have a disability rating from the VA. Okay. So keep in mind, if you don't have a disability rating from the VA, you pay a funding fee.
Right.
The first time use of your VA entitlement, it's 2.15%. If you go 100% financing. The second time around, it's 3.3%. So
of the value that is loaned, not the value of the property.
Correct, on the loan amount. So if you're going 100% financing, 3.3% of an $850,000 mortgage, that's a lot of money. Right. You don't pay at the closing table; it gets added onto your loan amount, but that's going to unnecessarily increase your loan balance, right?
Right.
So you'd have to be putting down probably 20%, because when you put down 20% on a conventional mortgage, you don't have any mortgage insurance, right? So large down payment. You don't have a disability rating from the VA, right? And then it still probably depends, right? So if you're making a truly massive down payment, like 50%, right? The interest rate could be comparable to a VA loan.
Right.
But the calculation you're going to need to do is, under which scenario do I save more money? Is it better for me to go conventional, have a slightly higher interest rate, maybe even a decently higher interest rate,
right,
but totally avoid any form of mortgage insurance? Or do I go VA, have a better interest rate, but have to pay that funding fee? And it'll depend. It'll depend on it. There's no way to have a solid answer for every scenario. It's going to depend. It's going to depend on your credit, what interest rates you can get. But that's really on a purchase transaction. That's really the only big reason why you'd ever want, why conventional would make more sense.
Right.
Now, there's another reason why you may want to go conventional. And we have this talk with some of our mutual clients every once in a while. Maybe, let's say Army Lieutenant Colonel's getting out of the Army, moving to Raleigh, not quite sure how big of a house he wants to buy yet.
Right.
But down the road, it's probably going to have pretty good cash flow. But for the time being, they want to kind of get their sea legs in the Raleigh area.
Right.
They're not really sure how much money they're going to be making in 3 years. So they're going to buy kind of like a transition home. And they're pretty confident in 3 to 4 years, or maybe we're confident in 3 to 4 years, they're going to buy a much bigger home.
Right.
In that scenario, it may make sense for them to go conventional so that they don't eat into their VA entitlement at all.
Right.
And that way, when they go to buy home number two, there's no need to make a down payment on home number two, right? There's no need to refinance home number one to free up the VA entitlement. They don't have to pay that loan off. They don't have to sell the home first to free up their VA entitlement, right? So that would be could be a reason why you would want to go conventional on that one purchase.
So a short time, if you plan on owning a home for just a short amount of time,
right?
And, either moving or fully retiring or whatever it might
right.
be.
And especially if home number two, not too far down the road, is going to be a bigger purchase,
Right.
I've done loans for folks before. A guy gets out of the Marine Corps. His wife is still in school. She's in dental school.
Right.
So right now they're making okay money, but they know 3, 4, 5 years down the road they're going to be making a lot more money.
Right.
So they buy a home now because they don't want to rent. But in that scenario, it wouldn't be a bad idea to go conventional so that when they go to buy that $950,000 home in a few years, there's no worrying about, okay, what's the max VA loan amount? What do I do with my current VA loan? They're just kind of ready to go.
I love it. I love the analysis and understanding an individual's scenario, right? Because not every scenario is the same. From a lending perspective, you could make it simple and say, oh, you're a veteran, you use a VA loan, let's do this, blah, 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 and just lay it all out there. And then somebody gets down the road and they realize 5 years down the road or 3 years down the road, man, I really shouldn't have done that.
Right.
You know, and just being able to kind of forecast out there is really important, I think. And it's one of the things I try to do with my clients, just on the type of purchase they're buying and where they're buying and what the community is doing, what development plans are happening, what the neighbors are doing, but also looking at that from the finance perspective. So along the same lines of should you use a VA loan or not is the timing of pre-approval. So if you're going to ETS or you're planning on retiring, when do you want to get pre-approved so that you make sure, if your plan is I want to buy a house right before I get out, or I think I'm going to want to buy a house, 2 weeks after I retire, or ETS, when do you need to get that pre-approval done?
So in general, there are no consequences to having the conversation too early, right? There's no penalties for getting to work 2 years in advance. There can be consequences to waiting too long. Specifically with active duty guys and gals, when they approach that 1 year time hack of retiring or ETSing or EASing, then they've crossed a threshold where we have significantly less income at our disposal, we meaning the mortgage lender, to use as qualifying income. So once you're within a year of getting out, we can no longer use your BAH, your BAS, your military pay. And if you're 11 months out, that's too early to get a disability rating from the VA.
Right.
Now, if you're retiring, we can use...
Because you're basically showing no income. You're going to have no income. I mean, according to, on paper, you have no income in 12 months from now or 6 months from now. So why are we going to lend to you? Because unless you can show me a job offer that's secure and right. Unless you could show me like in paper, like you're going to make $150,000 next year on this date and it's 100% guaranteed.
Right. So in the mortgage industry, we call it stable income. We always want to see, in order for income to be qualifying income, meaning in order for us to be able to use it, it has to be stable.
Right.
It's considered stable if it's likely to continue for 3 years. Right. So if we know for a fact it's stopping in 11 months, it's not stable. Right. Now, a retiree has a slight advantage because they'll have retirement pay that we can use, but that retirement pay is a fraction of their active duty pay plus BAH plus BAS. Both of those aren't taxed, right? And when you're 11 months out, you don't have a disability rating from the VA, right? At 11 months out, you probably don't have a job lined up post-service either. Some people do, but most people don't.
Right.
I mean, I would say usually 90 days out is about when you're going to get a job, if you're going to get one before you're out.
Right.
So once you cross that 1 year threshold, you are suddenly going to have dramatically less qualifying income. Right. Now, but what's cool is you can get pre-approved for a mortgage 13 months before you're getting out. And the VA is also very permissive in terms of like where that home would be, especially if you have family members who you can kind of pre-position in a home that's, away from that final duty station.
So does that pre-approval then allow them to buy a home anytime in that window from 13 months out to 1 day out?
No, we got to be 366 days away from retirement or getting out, transitioning
To use it.
right? So,
Right.
and I've closed loans 2 days before that 1 year threshold because you can still use it. Once you go over that date, all of a sudden, if not all your military pay goes.
Right.
Can't use that at all, right?
Right.
Maybe you have retirement pay. And then as you get, once you get within, the 6 month mark left, you may be able to get your disability rating from the VA within the 60 to 90 days from getting out mark. But that can be kind of tricky. Most
A lot of people just don't have the time to do all that before.
Right.
I mean, call a spade a spade. I mean, a lot of people just don't
Right.
have that time to be able to get their everything done through the VA and have that rating.
Right.
But it's a good reminder that if you do have to make that a priority among your list of priorities, to make that near the top so that you have that access to capital.
Right.
As you're leaving.
Mhm.
When you go to your chain of command, or you are the chain of command,
Mhm.
and you're the chief of staff, or you're the ADCO, or you're a busy person,
Mhm.
right? And that's one of the things I hear a lot is, man, I just don't have time to like do these things. If
Right.
you're going to do anything in order to be able to logistically move your family and have that ability to do that, besides getting a job, is get your VA rating.
Right. Yep.
Yeah. What do you hear from your clients that, they have questions about?
A lot of times I will hear feedback from my borrowers about things their realtor is saying to them. And a lot of times it will be kind of, I don't want to say fear mongering, but it's kind of these misconceptions about VA loans that we're talking about. But I'm not the agent. It's hard for me to get access with the listing agents to kind of set the record straight. Right. So some big ones I hear are, VA loans are brutal on sellers, right? VA loans aren't as competitive as conventional mortgages, or just kind of old wives' tales that a listing agent will relay. And then the buyer's agent will sometimes express concern to the buyer about
Right.
using their VA entitlement. How do you, what are your thoughts on that?
One, I think it's crazy that still kind of exists out there. There are a handful of scenarios that, sure, it might exist in, but they're really related to the market and the type of home rather than like just being able to use it. So for example, like if a home is in terrible condition, if you're trying to buy a home that like you walk up to it and what is that movie that Tom Hanks is in, Money Pit? Remember that?
Right, yes.
Falls through the floor and everything. If you walk up to the house and it looks like a money pit, it might be a little harder to buy that using a VA loan. But
Right.
for the vast majority of homes, I've had tons of VA clients, and that kind of issue has probably popped up 5% of the time. It's just a normal appraisal. There's usually
Has it ever killed one of your deals?
No. In part because if I walk up to a house and I look at it and say, man, this looks like the money pit. This is Tom Hanks's house.
Mhm.
I'm going to advise my client, you probably don't want to buy this house. One, it's going to be hard for the VA you're going to have a lot of negotiation on it. And two, do you really want a money pit?
Right.
So we usually walk away.
It's not as fun as you think, right?
Yeah, it's not as fun as you think.
Yeah.
Yeah. Then we start adding up the bills real fast. Well, this costs that, this costs that, this costs blah, 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 blah. And so we add up the cost to repair those houses. So what as a buyer's agent, I don't really scare my clients other than in those scenarios where,
Right.
okay, there's a money pit in downtown Fayetteville that you want to buy. Are you sure you want to buy this?
Mhm.
It's been flipped 17 times in the last, 20 years.
Right.
Probably not the house you want to buy.
Yeah.
If you're in the middle of Raleigh, buying a $450,000 or $700,000 or $900,000 house, that's not going to happen. We're not going to run into that. So wipe that fear off the table. That's probably the number one issue that I run across.
And I think some people have this impression also that the VA loan is hard on those repair items, but with other mortgage programs, anything goes, right? Like on a conventional mortgage, if you have a hole in your floor, that's going to be a problem.
Yeah.
If there aren't doors on the back, smash windows, like those are going to create issues. Now admitted the VA is a little bit stricter on that stuff,
Right.
but it's not like you can buy, a home that's half been burned down with a conventional mortgage and they're like, yeah, good to go as long as it's not VA.
Right. I mean, in North Carolina, when you purchase a home, every home is purchased by law as is. That doesn't mean that you can't negotiate repair items before you close. It's our due diligence period. And it behooves both parties to negotiate, right? So even though the law says you're buying a house as is, that's not really what happens. It's just that's what can happen. So you can't come back and say, oh, I bought this house, and it prevents some of the like lemon laws, like buying a house, unless the seller lies.
Now, when you are representing veteran buyers and you come across that agent that, was told by their BIC in 1992 never to take a VA loan because they're so problematic, do you tell your borrowers, hey, okay, I guess we're moving on to the next house? Or like, how do you handle that situation?
I call them and I talk to them. I mean, I explain to them, I listen to what their fear is.
Mm-hmm.
If we put in an offer and they're asking me, hey, could they go conventional? Usually what that looks like is I'll ask them, well, why are you asking? Just try to tease that out. But when they tell me that, after all that information they give me, I say, why would my client want to go conventional? Why would they do that? Here are all the benefits that they're getting. And you as a seller have very little risk.
Seller's getting paid.
Seller's getting paid the same no matter what. So seller or listing agent, are you afraid of something that's wrong with the house? Are you afraid of something that's an issue? What are you afraid of?
Right. Yeah.
Like, what are you afraid is not going to happen? And it kind of puts it back on them to tell me, well, I'm not afraid of anything.
Right.
Okay, well then sounds like we're on the same page. I rarely have a challenge getting people to understand.
Yeah.
I don't think I've really ever lost a deal because it was a VA loan.
Mm-hmm.
Maybe somebody had a cash buyer.
It's hard, but mortgage.
Exactly. And the reason why a cash buyer, if haven't been around buying and selling real estate, the reason why a cash buyer is attractive isn't just because, they have cash and they can afford it. It's that they don't have to have an appraisal. Right.
They don't have to make a mortgage bank happy.
They don't have to make any. We cut out Steve.
Right. Yeah.
We cut out
sad. I don't recommend it.
Yeah. So we cut out that.
Yeah.
And that's just it. Even though there's not a huge risk there, it takes it off the table.
Yeah.
Totally. So I've lost probably, houses to cash, but not conventional to VA.
Right. Yeah. And I've never had a VA borrower who ultimately had to switch gears and go conventional because they're like, I just can't seem to get under contract because of my VA loan. I've never had it happen. So.
No. Doesn't mean it hasn't, but maybe in other states it might happen. In North Carolina, I don't think it does because
our average age of home here is pretty recent. I mean,
it's pretty recent, and in North Carolina we have due diligence money and escrow money when you go under contract. Most people focus on due diligence money because due diligence money is non-refundable under any circumstance. Due diligence money is not escrow money. So in North Carolina, if you're going to put down, say, $3,000 or $5,000 or $20,000 in due diligence, that's the same as somebody who is a conventional buyer, right?
Right. Yeah.
The second pot of money, escrow money, doesn't come into play it doesn't go hard, doesn't become the seller's until after the due diligence period, and that money can be returned. So under all the VA rules, that escrow money can be returned to you, but the due diligence money, good luck getting it back. Right. I've heard people try to get it back because they think that the VA tells them that they can get back all of their escrow money, and due diligence money doesn't fall into that. So that's why North Carolina, when you're buying a house in North Carolina, it actually puts you kind of on the same page.
Okay.
It forces everybody to have to. Now, sometimes I have to educate a listing agent about that. No, they can't get their money back. They can't get their due diligence back.
Right.
Just like every other buyer.
Right. Okay. I think that is one thing that kind of sets you apart. I have worked with buyer's agents who will kind of discourage their buyers from going VA. Or when they come up against that kind of stubborn listing agent, they kind of collapse and they fold, right? And they back off.
Right.
Instead of kind of flipping the switch, flipping the narrative. So, I think any veteran borrower is in good hands with someone who's well versed with VA lending and who has a lot of reps representing VA buyers.
Yeah, I mean, I like to say in all things in life, it's a matter of how much you care, right? I mean, anything that you do, it's how much you care. And I think, being a veteran myself and leading Raleigh Veteran Connect, one of the larger networks of veterans around the country that are kind of localized to the Raleigh area. Yeah, I'm invested in the veteran community and treating them well, and I care. So that's why we do what we do. So that wraps up our discussion on the myths and misinterpretations and misunderstandings of VA loans. My name is Pete Marston. I'm a local realtor. I've lived in the area for nearly 20 years. Steve Doherty, I really want to thank you for joining me and talking about VA loans. I'm also the founder of Raleigh Veteran Connect. Raleigh Veteran Connect is one of the largest networks of veterans in the country that is focused on a local area. We have close to 2,000 high-performing veterans in that network as well. And don't forget to take my contact information out of the description below. You can call, text, email, or even set up a Zoom, and we can talk about what a smooth transition to the area looks like for you. Don't forget to hit the subscribe button or tap the bell below. That way you can be in the know about all real estate things in Raleigh, North Carolina.